Hello everybody, this is the top-down analysis, the monthly top-down analysis for the month of March, looking at the Forex market coming from the higher time frames. So here, well, what we basically see overall is that we see a British pound strength, euro strength, and Swiss strength, the Swiss franc, and we see yen weakness across the yen pairs. Now let's have a look here, starting with the most liquid currency pair, the euro dollar. Well, the euro dollar, well, we actually have to look here at the monthly chart, right? Because it's such a big consolidation over here. That's an overall S1. And we've basically come down here and tested the low several times. Well, the last test was a lower low, and it's basically, well, it spiked at the par level, right, the one. And it looks like, because it went down with so much force, a lot of momentum, tested it, and then it rejected, it bounced back. It looks like this was a test, right? And this test failed. Well, a failure to follow through, because the bears had here the opportunity, right, breaking all those levels, well, to create really a big stop run move down to maybe the 80-cent level, right? Well, they have not been successful. It's bouncing off. Well, it's a trampoline effect. And it looks like, well, we might get another push higher, at least a second leg, and then we might get to this critical level, right? I've talked several times about if that level breaks, well, we should see the dollar getting weaker and weaker over the next 10 to 15 years. Now, this is the monthly chart. And here on the daily chart, well, actually the 240, we can see it's kind of, yeah, let's call it a not good quality, an ugly S1 pattern. It's still an S1 pattern, and these are stop run levels. So despite the low quality, if it works, and if the stop run levels are breaking higher, well, that should actually tell us, okay, now the second leg is in the making. Now let's have a look at at the euro pound. So we can actually see here how the pound is stronger than the euro. Both are strong, and it looks like we want to break to new lows here on the daily, and then we might actually see some follow through as well. Now against a weak yen, so the euro is strong, the yen is weak. Well, we can see it here, right? We've got nice uptrends. It's just following up, what it was doing before. We had a target level here, spiked that. There was a big number, and we got a big monthly stop run bar. Now let's have a look at the Swissy, the euro Swiss. So we have an S1 pattern here. And it's just like slowly and steadily, it's just following its path, what it should actually do. And we can actually see how there's, well, that comes from prior top-down analysis. This can go much lower, as it did over the last many years, right? Let's have a look at at another one here, the euro odd, for example. Again, here that's an S1, a bullish S1 pattern, so that's a euro strength against the Australian dollar, and that should go even higher. And well, that was the corona spike, and it looks like, well, the bulls want to get there, right? That's an important psychological level that acts as a magnet, and that's as well the par level right here. So that's a cluster area and a magnet level. So it looks like there's no resistance in the way, right? So it looks like the bulls actually want to get there, and that offers opportunities on the lower time frames. Now let's have a look at pound. So a strong pound, we can see it's strong against the US dollar as well. So should it actually be able to print a weekly bar closing above the 200, well, that would be a bullish event for the euro, and basically the pound, well, a bearish event for the dollar, right? US Swiss, so the Swiss is strong and the dollar is relatively weak. So again, here we have to look at the higher time frames, monthly chart. So here we've got an overall S1 pattern short that is slowly and steadily, right? It's making lower highs and lower lows. And here we've got another S1 pattern forming that has nicely tested the 200. That might have been actually the last kiss, touching the 200 and the par level. very important level, got a strong reaction, we're breaking the flat, and it looks like we're off for new lows now here. So again, Swiss strength basically all across different currency pairs that involve the Swissy. US CAD, here we've got a pattern on a weekly chart, an S1 long, that has actually already triggered, right? It has rebroken the flat, and that's a bullish. Well, it's not of high quality. The touches are not very precise. We've got white space, not a lot of compression, but it's a bullish event within an overall a bullish chart, a monthly chart as well. And again, here we're basically shooting for this important level. Meaning that the CAD is even weaker than the US dollar as price goes up here. Let's have a look at the yen pairs, right? So we see yen weakness across the range. Now, interesting here, I've marked that level. Well, this is the first level here, where the Bank of Japan started its first intervention at this level. That was the first intervention on that day, and here was another intervention on that day. And we can see how these levels, well, these are psychological levels. And it could be bank levels, right? It could be that the Bank of Japan actually intervenes again at this level, or it could just be a psychological level, like the bears gain confidence and they push price lower. To me, it rather looks like it's a psychological level. The market doesn't forget these important events, right? Swiss yen again, right? Bullish, nice bullish follow through. No, these daily charts, I mean, these strong uptrends, these are great charts to trade on a lower time frame. Odd yen, similar picture, right? Here we've got an S1 and a potential stop run where we have to break to a new high to actually develop here further follow through. CAD yen, right? Very bullish, well, weak bearish for the yen as well. Here just broken higher. This one here, pound yen, nice, right? Strong pound against a weak yen. So this gives us the best trends, and that's what we see. That's what we see again. Here we've got an upper level to reach. So we've got nice trendiness here in the higher time frames, and that always helps, because trading a lower time frame, 5, 15, 60 minute, for example, well, that gives swing potential to the trade if it's traded, if the trade is taken long. Now let's have a look at a last one, the pound. So a strong, right? A strong currency here. Let's see, why did I want to show you that? I'm not sure, but well, we had a run down that was foreseen before, right? We've got a big rejection bar. It's basically a hammer at a level where price is overextended from the moving averages, and this is kind of a technical. That's a snapback to moving averages, and we have to see what comes out of here. Well, the bulls are gaining ground. That's another good bar close, weekly bar close above the 200. And basically, well, the bulls are conquering, right, the space that is north to the 200. And when this is done, well, then they can break free of the 200, which is always a magnet level as well. And then, well, the next level is basically is up here, right? So again, here we've got a bullishness to come, but basically it's a special level. So you want to wait for, and it doesn't need to take long. It's basically waiting for this level to break higher, which is this wick, and then basically there's free space to for continued follow through here with pound CAD. So trading the pound long, being a strong currency across the range, well, it's always a good idea, right? Similar the euro, similar the Swissy, and we've got pound weakness across the range.